Hey everyone, Couch Investor back to our video for today. So let's talk about the exciting IPOs that are probably going to happen in 2024. Now, currently, according to some analysts, the unicorn market, companies that are worth $1 billion or more, globally, is worth $3.8 trillion. Pretty interesting, right? So plenty of companies are waiting on the sidelines to maybe go public. Again, not all privately held companies will go public. Now, with an IPO, initial public offering, it can be a great thing for retail investors because suddenly you can buy shares of a great company. And if it's still early days, you can go up with this company's valuation, with this company's growth. Now, on the flip side, as we've seen in the last year or two, you can also get burned, meaning a company goes public for one and only reason is to get extra liquidity. And those that have invested in that company when that company was private will offload their shares on the market, which leads to IPO stocks being down 50, 40, 60% or so. Of course, this is short-term thinking, but long-term, if you're buying a great company, you should be doing okay. Now, in 2023, there have been 154 IPOs in the US stock market. That's a close to 14% decrease from 2022. Now, some of the more popular names were Kava. This stock is actually up 102% since it went public. ARM is up 45.5%. And then we have Birkenstock that's up 8.83%. I believe there was also Instacart that went public, Kenvu, and of course, many others. Now, usually companies don't go public when the market is in a down cycle unless they really need to raise funds. This is why we've seen in 2020, 2021, a lot more IPOs. I mean, look at 2021 here. There were 1,035 IPOs in the US stock market. It was 120.4% higher than the 480 IPOs in 2020, and of course, much higher than what we've seen this year and last year. Now, when the market picks up again, when suddenly now inflation comes down, interest rates will come down, you will see more and more companies thinking, oh, maybe now is the right time to go public. Again, why? Because they can raise more money, get a higher valuation, and especially the investors that invested in those companies when they were private, they'll have even better returns. But this is, again, might be a trap for retail investors. So think twice before buying into an IPO stock. Now, in this video, I want to talk about the big names, the names that you've probably heard before. Shein, Databricks, Reddit, Skims, maybe SpaceX Starlink, although I don't think that will happen already in 2024. And then we have Stripe as well, Klarna, and some others. So let's discuss. If you enjoy this type of videos, give it a thumbs up, subscribe. If not, we really appreciate that. And of course, share your thoughts on what IPO are you most interested in 2024? Let me know down in the comments below. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first big company I want to touch on is Shein. So Shein is obviously the Chinese e-commerce company. They target up to $90 billion in valuation in US IPO. Now Shein apparently did $23 billion in revenue last year. This year, they had the most profitable first half of the year. They've been building distribution centers in Canada, United States, and Europe, and the United States is their biggest market. Now, of course, the risks here are one, China risk, labor risk as well. How do they get these items so cheap? So those are risks to consider, and of course, increased competition as well. Temu is definitely growing faster than the market. Now, it will definitely be interesting to see another big Chinese company go public on US markets. Maybe that might change the perspective for other Chinese stocks out there, such as Alibaba, for example. Up next is probably going to be very popular for the women investors out there, and that's Kim Kardashian's company Skims. So in July, she got $500 million richer thanks to that company. She raised a fresh $270 million in funding, pushing its valuation to $4 billion, enough to add $500 million to Kim's fortune. According to the Times, Skims says that it is profitable and expects to hit $750 million in sales this year. That's up from $500 million in 2022. This means sales growth of 50%, which is quite remarkable. And if they are really profitable, that's also quite impressive. But right now, we don't know, we don't have much more information. When they'll file for IPO, you'll get way more information. You get to see the cost of goods sold, cost of revenue, margins, net loss in the past, maybe net loss right now in the coming quarters. Who knows? But right now, yes, this is a company that is growing quite fast. This is a company owned by one of the biggest influencers around the world. But that does not mean that it is worth the price that you're going to pay when it goes public. Because usually when the market is in an upcycle and a company that is very, very popular, that gets a lot of momentum, usually jumps quite a lot in the first and second day of its listing. And so you are probably going to get trapped as a retail investor. So keep an eye out on that. It could definitely be a good company. We don't know. We'll just have to wait until we get that filing. Up next is the huge payment company, and that's Stripe. Now, Stripe should have gone IPO already. It didn't because of the market downturn. Now, according to some sources there, it is now valued at just $50 billion. I'm saying just $50 billion because the last time I talked about it, it was closer to $100 billion. So, okay, opportunity missed. And they are saying here that Stripe might actually consider a direct listing in 2024 if the fintech space rebounds and the market conditions improve. The anticipation surrounding Stripe's IPO stems not only from the impressive valuation, but also its consistent growth and market dominance. Despite delaying its IPO in the past due to market conditions, Stripe's market debut could become a reality in 2024, provided that the fintech sector experiences a rebound. We have already seen a little rebound in the last couple of weeks when it comes to fintech stocks. So maybe, yes, maybe if we're going to see rate cuts, maybe that will be a signal for Stripe to go public. And if it's a direct listing, that becomes even more interesting for retail investors. Again, Stripe is probably one of those companies, one of those IPOs that will be extremely popular, that will have immense demand because it is a tremendous company, a very, very well-run company. But again, even with those types of companies, there is a right price to pay. I'll touch on Databricks later on in this video. I just want to jump to Reddit. Reddit, the social media platform. Reddit, you've probably heard about it when we talked about GameStop, Wall Street bets, and lots of other theories, memes, you name it. It is also quite a good source of information because, well, people there are anonymous, so they can leak stuff, share things that you usually won't get on other sites, even though you could get most of it on X already today. But Reddit is such a platform. Reddit makes a lot of money. Well, a lot of money. The majority of its money comes from advertising as well. And here they're saying that apparently it's attracting over 50 million daily active users and boasting a valuation of approximately $15 billion. Now, to be honest, 50 million daily active users and a valuation of $15 billion. When you hear the headlines of X being worth less than half of what Elon Musk has paid for it, you come at a price close to $15 billion. And X has way more than 50 million daily active users. So you start to think maybe Reddit is here extremely overvalued, especially if you know that this company was founded in 2005. So this might be an IPO or, as most say, a liquidity event. Investors, maybe employees as well, pushing for an IPO so they can sell their shares and get their money in their pockets. Could happen. With Reddit, it will also be a very, very popular IPO with the retail community because of what we've seen with Wall Street bets, because, well, Reddit is a company that has lots of communities, lots of retail investors there as well. So maybe they would like to be part of that IPO when it becomes possible. Up next is another company in the fintech sector. It's the buy now, pay later company called Klarna. Now, Klarna is another one of those companies that would have gone public already a year or two ago if the market conditions were much better. That didn't happen, and so their valuation got also slashed by quite a lot. I believe it was worth, well, it got a valuation between $30 to $40 billion a year or two ago. Right now, it's closer to that $15 billion mark, especially when you look at Affirm, which in the last couple of weeks and months has gone up quite a lot because of partnerships, financials becoming better and better. It has a market valuation of $15 billion. Now, Klarna, despite being a private company, is sharing quite a lot of financial data. In November, they actually gave us quite a lot of numbers from their Q3. So they say here this was the fourth consecutive quarter of gross profit in the market, including a 46% year-over-year rise in GMV and 28% improvement in credit loss rates. This growth is fueled by increasing adoption and demand for Klarna's increasingly diverse AI-driven product suite among US customers and retailers. Today, Klarna reaches over 37 million customers, that's an increase of 32% year over year, and 26,000 retail partners, that's an increase of 38% year over year, including Macy's, Nike, Airbnb, StubHub, Instacart, and more. Now, the CEO here added a couple of comments. Even in a challenging and evolving economic environment, Klarna's success in the United States continues, marked by double-digit year-over-year GMV growth in Q3, 37 million plus customers, and a rapidly expanding retail network. Klarna's strength in the United States is fueled by growing demand for our fair and flexible payment products, with over 99% of our US customers finding it helpful for avoiding higher risk, interest-bearing credit options. Additionally, our growth is significantly propelled by the popularity of our expanding AI-driven services included in the Klarna app, which now boasts over 7 million users in the United States. And so here again, same with Stripe. If we see an improvement in the fintech sector, expect them to get maybe a little bit more than that $15 billion in valuation. Now, previously that was $7 billion, but since Affirm, for example, has gone to $15 billion, since the market has pushed up the publicly traded company a little bit, I assume Klarna will get that push as well, especially if it decides to go public. But it's already a big positive that it provides us with this transparency despite being a private company. Then moving on to the next one, and that's Databricks. Now, Databricks back in September was valued at $43 billion, which is more than what Palantir is worth today at $38 billion. Now, Databricks works with a lot of big companies around the world. Databricks and NVIDIA, for example, are building transformative AI technology, and we're excited about the business value and innovation we can bring to our customers. Here they talk about Lakehouse, which unifies data, analytics, and AI on a single platform so that customers can govern, manage, and derive insights from enterprise data and build their own generative AI solutions faster. Enterprise data is a goldmine for generative AI, says Jensen Huang, founder and CEO of NVIDIA. Databricks is doing incredible work with NVIDIA technology to accelerate data processing and generate AI models. Now here they gave us some numbers from their Q2. So they crossed $1.5 billion revenue run rate at over 50% revenue year-over-year growth, which again, if Palantir is worth now $38 billion and not growing as fast as this, then you can maybe see why in the private market they're giving this a $43 billion valuation, because it is growing quite fast, 50% here year over year. It ended the quarter with more than 10,000 global customers, including over 300 customers consuming at $1 million plus annual revenue run rate. It achieved record non-GAAP subscription gross margin of 85%. Now fast forward to November, again they did a raise, and here the valuation stayed at $43 billion post-money valuation. Now of course, when talking about Databricks, most of the comparisons go to Databricks versus Palantir. So here I pull up a post by Arnie, great follow on X. So Palantir is ahead of anything else in the market. Ex-Palantir employee for 7 years disclosed this in an interview at Alpha Sense. So what do you need to know? 1. Speed of Foundry development is significantly improving. Databricks is the closest competitor, but misses permission flows and the ontology concept. Momentum building from 8 to 10 engineers for one client. By the time he left, to 2 engineers per client. Manufacturing is the best vertical, finance not taking off apart from compliance. Growth was not strong due to long sales cycle, now solved with AIP bootcamps and partnerships. We've seen a lot of data in recent weeks with regards to bootcamps and how that is improving quite fast. Palantir is a platform way ahead of anything else in the market, and that itself is a moat. The rate of improvement, we've seen that with Tesla as well. If you can improve and move faster than the rest, yes, that could be called a moat. Of course, this just comes from one source, so don't make this your conclusion when it comes to deciding between Palantir or Databricks. I'm pretty certain that Databricks is an extremely valuable company. Otherwise, its financials would be looking much worse than what we've just seen. So that will be it. Those are the big IPOs right now for 2024. Again, we can maybe see SpaceX, Starlink, although I still think that 2024 will come a bit early for them. I think they'll wait until Starship gets a successful complete launch. Then there are also some rumors of Anthropic, OpenAI as well, developing stories. So these are the honorable mentions, let's say. Now, do share your thoughts down in the comments below. Which of those companies are you most excited to see go public? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.